Welcome back to the channel. I hope you're having a great day or start to your weekend wherever you are around this beautiful planet of ours. Today's video, absolutely critical structures are breaking down. We are on the verge of that with the US dollar collapsing, something that we have been covering here on the channel for many months now. It breaks this level. We are looking like the US dollar is not going to see new highs this cycle. Stay tuned to the channel, like, subscribe, bell notification icon. Let's look at the US dollar, what that means to the S&P as it gets very, very close to this next target level to flip bears to bulls, one more off our checklist through this period of extreme fear. You've heard me say this many times before if you've been a regular viewer of the channel. Things are looking up at this stage, not to straight new all-time highs, but the rounding of bottoms, which I believe will take many months, looking forward into Q1, as we discussed in yesterday's video looking at the December forecast. But for today's video, we're focusing specifically on the US dollar, as some of that critical structure is breaking down over on this chart. Of course, this also can mean some good times for Bitcoin ahead, moving into that second half of the real estate cycle. And in terms of the short term, we still need some critical levels to overcome and start to find some support for on BTC. The last thing I got for you today is the crypto markets, some of the retests, some of the final capitulation zones, and two types of degens. Some may get a little bit triggered, so hands off the keyboards until we get to that point in the video. Let's first start with the US dollar and things that we have not seen on the USD since the pandemic collapse of the 2020s into that early stage of 2021. The first thing I'm covering here is our price levels, this structure here, looking at the price of 104. We brought this to you here on the channel and the Investor Accelerator several months ago as we've been following this into this second half of the real estate cycle. And if in case you're wondering, you haven't seen it before, quick look at this. I know many of you guys have seen it. And the fact that we've been covering this for so long now, thanks to the help of Akil and Phil at Property Share Market Economics, credit where credit's due. This is a lot of heavy work and a lot of hours, stuff that 99.99% of people will not tell you online. They purely just don't understand how all these cycles come together. I know that can sound a little bit, a bit pig-headish of myself, but really this stuff has helped me so much in my investing since I started when I was 20. So I'm 36 now, coming on 37. This stuff has helped me for 16 years. Absolutely amazing work here, which almost no one looks at. So we are in this second stage of the cycle, grinding out through this particular level here of the mid-cycle slowdown. What tends to happen in this second half, which is all what we're talking about here in this video, is we tend to see the US dollar drop and the rest of the markets head up. And I think crypto is going to get caught up in that this time round, going up that is, and that will lead us into that final capitulation for land values, which are the most important, stock markets, and crypto will also get another go. All of these won't peak at the same time, but we should see it all go together for some period of this stage of the cycle. The great thing here is that we have timing. So once we get that timing right on point, then we can look at what the price is and begin to sell our bags, whichever that may be, stocks, real estate, crypto, okay? So we're just watching this particular part of the cycle, which we've talked about many times before, somewhere around this mid of the decade, 2026, maybe slightly earlier, maybe slightly later. We still have plenty of time up on our sleeve and up our side, all of the above. So what we haven't seen since the collapse of the 2020s is 9 weeks down in this cycle of the US dollar. So the week is about to close tomorrow, so another day left on this particular chart here. And should we get this close below this level that we've been watching for quite some time, around the 104.5, you can see our 50% level here. This is for a monthly swing, top to bottom here. That's what this red line here is. If I change it over to monthly, that's what we'll get. It's at 104.7. So closes under this level is going to be critical for the US dollar. If it closes under, probably looking much, much weaker. It starts to swing the probabilities in the favor of weakening US dollar. Yes, we will see bounces. You will see movements up. But if we start to get prolonged closes under here, multiple closes, then that just starts to push a lot further down and will probably start to test the 102 and 103 level, which when we look back in history has been a key area of resistance. So this is back all the way 2015, 2016, 2020. You can see that how critical that 102.8, call it 103, has been for the US dollar. And really, this has collapsed a little bit quicker than I was anticipating. You know, if you've been following, we've been watching that peak that came out through the previous 20-year cycle. This is during the tech boom and then the bust, so the subsequent bust that happened through the stock markets. That dropped. Yes, some real estate values did come down slightly during that period, but we all know from history, 2004, 5, 6, 7, nice strong years up for real estate while the US dollar was dropping. This is what we're anticipating this time round. Sure, you're going to get some bumps. I'm not saying we're going to dump in much of the same sort of percentage, but we should tend to see the dollar start to fall into that later half of the cycle. And this is just another piece of the puzzle with the weekly chart, which for the US dollar, you probably want to look at the monthly for the macro, but closes under this level, the 104.5, is really going to start tipping it to the bearish side a little quicker than what we had anticipated. So in terms of a timing here, just so people aren't thinking, you said it was going to go down and it bounces up next week. Look, we can see from the previous drop in 2020 into 2021, the late part of 2020, right? All the way down here. We've got weekly periods of top to this low point of about 12 bars, which means 12 weeks. The next period here, if we want to zoom in and just make it a little bit cleaner for ourselves, we've got the top to the bottom here, 9 weeks. And if you want to take it to the previous top where basically the energy stopped in the market, you could say it was about 10 to 11 weeks. So you had that little bounce up for a couple of weeks, which is what I'm saying now. Maybe we get a reversal of 1 to 2 weeks once we find this low for the US dollar, go on a little bit of a bounce here, and then you get another move to the downside. That was about 9, 10, 11 weeks. Another little bounce up, 15 weeks to that low, and then the final low here, which was the higher low, which then put in the next bull market for the US dollar, was about 8 bars. So we've now exceeded the 8 bars, and we're probably somewhere between that 9 and 15 bar area. You've also got another data point here of around 13 weeks. So once the US dollar finds a low, and tomorrow is going to be a really important day, whether we get a close under this level, maybe that's 10, 11 weeks. We remain at these levels between that sort of 103 and 105. We get that little bounce back. Let's see how far it goes up, but we would probably anticipate somewhere around a 2 weeks, like you could see here, 2, 3, 4 weeks. Same sort of deal here, 1, 2, 3, 4-ish weeks. So that could be the bear market rally for the US dollar. So keep that in mind in case we start to see that bottom form and then a bit of a reversal. What that means for stock market, might see a little more relief here should the US dollar continue to drop. But if the US dollar does find its base relatively soon, which may happen here for the US dollar because the S&P is also finding some resistance here at its bear market downtrend, getting very close to the 50% level, getting extremely close, within 2.5% of our target price here. You guys have seen this on the channel since the low formed in October. This is the level that we've been waiting for this entire period. Drop us an emoji down below of the up chart if you remember us talking about that all the way back here. This is the sort of forecasting that we do on the channel to help us understand what it is that we are waiting for macro confirmations. We need multiple of them. This is just one of those many confirmations that we're waiting for on the macro chart. Because once these sort of things happen, it's not like we go all the way off to the races. What can happen is this gives us the signal that the strength is in and we are really starting to show some flip from the bears to the bulls, but we get that opportunity for the retest so that those potential higher lows here that may form. Basically, the markets come up, check, bulls are almost back in control. Let's get that drop down. Buy when everyone else is absolutely fearful. If the markets drop below these levels, bam, sell out. We were wrong. It's invalidated. But the beauty about that is that you are so close, so you get to put your stops closer to the lows, which keeps you safe and protected in the market. Unlike the majority of people who will start buying at the higher prices because they feel confident and comfortable that the market is going up. And then they're the ones who get absolutely destroyed when they see the pullback and they wait and they start to sell out at the bottoms again. But we know if this is the base and we start to hold here and we move up again, bam, we've got ourselves a really, really good entry. And this is basically just the chart pattern across any crypto stock, whatever has a chart. This is the sort of thing we look for because this is what investors are doing at that time, the smart money versus the dumb money. And so we're about 2% away from this particular turning point, leaning, working back towards what we were talking about with the US dollar itself. If the US dollar finds some strength, maybe we get rejected here at the bear market downtrend. You can see this has had 1 hit, 2 hits. We're now onto our 3rd hit, and we potentially get this little bit of a pullback here, maybe for a week or two, because we have been heading up for a number of weeks now. 1, 2, 3, 4, 5, 6, 7, maybe into our 8th week next week. Let's wait and see on that one. So that could all be working out together to hopefully get that push higher into December, which is the timing that we've been waiting for here, into that little bit of a Christmas rally. And then I suspect we will get a pullback, probably January, February, something like that. Let's wait and see, maybe the end part of December. So how is all this working out for BTC right now? Well, on the weekly, we got another couple of days to go before we get the final weekly bar close. Obviously on the futures market is going to close up tomorrow morning. So stay tuned to the channel. We'll come back to this then in the morning. Ideally, we really need to see Bitcoin get above around the 18,500 on the futures market. But for us, the spot market, the market that we're mostly trading here, without all this mess here, the step 1 is in play now. So the multi-hourly bars have been hit. Weekly, if we drop it down to the daily, we're above our level here, about 16,700, just getting this short-term pullback to hopefully test the upper side of the 16.7. What this means is we set up again to try and break out of these highs of 17.2 and head towards our target above 17,600. So that's our step 2, our multi-day close area that we want to see Bitcoin for furthered strength, and then set itself up for the moves back above 18.6. The move above 18.6 is really an area that I would love to see for basically a multi-week, potentially a month or two of sustained up move for BTC. Let's start with the dailies and the weeklies, but if we can get those levels, that is a really strong sign for BTC, at least in that sort of short to medium term, to continue grinding out at these higher levels, and the old Wyckoff pattern would still be in play, and this would just be basically one of those tests of the low. We climb back up again. Good night to all of you 10K Bitcoin hopefuls. That's probably, that dream is potentially over, but if you did get that break above right here, that 21.2, 21.3, then yeah, you can almost put that final nail in the coffin for those 10K guys. No stress if you're trying to remember all those numbers. We will continue to update those numbers on the channel here, and I'm sure I'll throw it into some titles because a lot of people do get a little bit upset when their 10K target is not going to get hit. Remember, in the markets, there are no guarantees. A lot of people are hoping for a $10,000 Bitcoin all the way down here, but we've only just put in a second low here at 15.4. Of course, we can come back down, maybe get down to 14,000, but it's still not the 10,000 that a lot of people are waiting for. And I think it's a bit of a fool's game to continue to wait for a particular number based on whatever it is you think is going to happen when you've got a lot of great opportunity right now in the market. Now let's have a look at the cryptocurrency market and the 2 Degen types of investors here. But before we do, just a quick shout out to our TIA Alpha report. Link is in the top of the video description here. Absolutely free, guys. Go and sign up to our newsletter. It's coming out next week. Basically, we go through Bitcoin, cryptos, and the real estate cycle as well. So the link is right here in the top of the video description. You can see we're trying to find a base here at about 720 billion, with the yellow line being at 760 billion, which is basically the low of June. So we've only just touched a little lower here. And then the market on the weekly, at least, is trying to close back above that June low, which is a pretty good sign overall. But this particular pattern here, where you get this big move down on the weekly, this very weak move to the upside, almost seems like we're going to get a lower swing top. So what happens here is you get that lower swing top back at previous support, flips to resistance, and then you get that dump out again. That could be one of the final capitulation levels for cryptocurrency as a whole. And if you remember from this particular couple of videos ago, we're looking at these final capitulation zones. We're currently in that now for the total cryptocurrency market cap. Worst case capitulation zone all the way back down here. It's still good. it's worst case, but we can still recover from it, which is why I've got good. Wicks down to this level is all you want to see. You don't want to see this market go below 400 billion. And then under that level, basically something wrong has happened to Binance, tethers and stable coins, and no one can open up exchanges anymore. Anything sort of under 300 billion, I'd say something has gone pretty wrong with cryptocurrency. So we're currently at these levels right now, not looking as bad as what we were just a few weeks ago, but I'm still very wary until we close above 850, 860 billion on the market caps. This is still a potential weak bear market rally before we get a final flush out of the total markets here. As for the two Degen types, you got the newbies, the Twitter liars. I know that could trigger some people, but there are so many people that talk about low after low after low, absolute lies, or potentially buying all of these altcoins. Absolute BS. Don't ever fall for that sort of thing. The other is conservative, the quiet mouths. You don't really hear from them because they're more of a conservative play in the market. And basically what this looks like is the Twitter liars. We've talked about this with altcoins, like buying strategies. Is basically I bought altcoins here. I bought, I'm buying on the dip. I'm buying on the dip. I'm buying on the dip, the dip, the dip, the dip. And that's all you ever hear. And until the dip is no longer the dip, and then they're buying the dip all the way back up again. Basically buying too much at these high levels, don't have enough for the bottom. They still say they're buying all the lows, and then they start buying again at the next dips and so on and so forth. That's essentially what the mindset is out there because people don't remember history and what's going on there. The beauty with Twitter is people can capture those tweets and start to repost them. So always look out for those as well. But then you got the conservatives here, which don't show the same sort of high percentages as if you said you bought at these levels and then said you sold at the tops, because you're basically taking a chunk out of the middle. So it's just basically a little mini lesson here at the end of this video about cryptocurrencies, because I still don't see a macro flip for the total cryptocurrency market cap. And that just means that we won't be catching a low, but we will be catching a stronger market once we see a break of the bear market downtrend, a break of the monthly swing tops right here. And then eventually, once we get some higher swing lows on the monthly and breakouts and the trend turns up on the monthly, that's when we get the macro bullish look here, where it's actually far, far safer to be buying altcoins for the longer term. Trading, different story. Long-term investing, basically long-term swing trading on altcoins, I think should be done when the market is confirmed as an uptrend. It's not sexy, I get it, but I'd rather be safe in the markets and survive a bear market, be there for the next bull market, because otherwise you miss out on this sort of gain and you basically wish you were involved, but you're not. You get excited at the top again and the same cycle repeats again. So stay tuned to the channel. Look out for the two types of degens out there. The newbies, the guys who just go on and on about buying the dips, and then the others who are pretty damn quiet. You've got to look pretty hard for the ones who are actually buying and staying safe in the market, taking their profits and getting out. Because when they talk about taking profits at the top, nobody wants to hear about it. Stay tuned for that as well. A last shout out to you guys. No wacky sound effects, no stupid video editing, no robe wearing DJs or trading snipers. Thanks, Jason. Always appreciate the chart analysis and level headed delivery. And it seems like a lot of you guys were loving that as well. Yes, the channel here sometimes is not as entertaining as some of the newbie stuff that you see when you first come out, but hopefully right here on the channel, we're giving you the absolute value when it comes to setting up your own trading, your investing, and staying safe in the markets rather than trying to use the markets as some sort of gaming entertainment. I'll leave it there. Check out the videos that are popping up on your left-hand side over here. Hope you enjoyed that. I'll see you guys at the next video. Until then, peace out.